Okay, the next part will be about financial control with budgeting. There are few steps that we need to perform. Number one is we're going to compare our actual firm performance with budget estimate. We have this estimate budget. Then when the time comes, okay, we have our actual performance. We compare our actual performance with the budget, whether we perform better than the budgeted or we perform uh, poorer than the budget. Okay. So number two is identifying any significant variance, whether it's favorable, is a positive, or whether it's negative or unfavorable variance, and deciding what management action should be taken. If you perform badly, so there must be some corrective action or a new revised strategy to ensure that it won't continue and you are able to recover from the existing poor performance issue. The budget performance report shows the significant differences, variances between the actual and planned performance, provide the feedback necessary to evaluate the financial result on the basis of management by assumption. We are looking at the poor performance. Why we fail to achieve certain target? Why we fail to deliver the goods, for example, why we fail to produce the goods, in such quantity, or why our sales did not achieve the target. So these are the things that we're going to investigate. We're going to compare our actual with our plan or budgeted figure. Unfavorable variants are investigated to determine the cause, okay, whether the corrective action can be taken to improve, the future performance. So we are going to do some investigation there. Number two, variances may be due to increases in efficiency that can then be incorporated into future plannings. Maybe when you produce more and more, you have this develop your competencies, your skill, so it reduce your number of hours needed. So that's good thing about it. So you need to check on that. Number three, the performance report are prepared for the business as a whole and for its various segments on a responsibility accounting budget. We have this big master report and we have so small detail by segment or division to have access which division perform well or which division failed to achieve target. So this is about control and budgeting. So let us just go for another example here, another round of example. This comes from the textbook Hoggart, exercise 23.19. So you don't have to do this example or a question with Miss Yusra during your tutorial. So Hua Chang Resort has prepared the following budgeted amount for its cost for year 2020. You are in the year 2019. Now this is budget for 2020. Hua Chang has 32 luxury rooms available in the resort. Okay, so the business has 32 luxury rooms, operate 365 days of the year. So without any off days, so it works 375 days a year. So what are the costs incurred? We have this fixed cost. This is fixed, mean it will not change. So this is the fixed cost. Even though there is no customer, there you will still have to pay the wages. Maybe the sales manager, you have to incur electricity for maybe for the compound, for the lobby, for the areas. You still have to clean the facility. You have to have some supplies there, some water fees, maintenance. So this is fixed. This is fixed. The key here, all this figure is fixed. When you have customer, the wages, you have to incur this cost per room. This is per room, per night. Per room, per night. Per room, per night. There is $6 wages, electricity $4, cleaning $6, supplies $1.50, water 20 cents, and maintenance $1.20. So this is the cost per unit per night. Per unit per night. Okay, if you want to estimate the maximum number will be 365 is multiplied by 32. So this is the max. It won't happen like that. Most of the hotel, they might have around 30% or 40% occupancy rate. It won't happen like this, yeah? But for every one night and one room, the cost, this is the cost. This is the cost. So your task now is assuming that your occupancy rate for next year is 75%. Okay. The actual cost incurred for the year were as follows. You don't have to calculate that one. You're given this is the actual cost. Okay. Let me just calculate. You have 32 multiplied by 365. So this is the max. And then if you manage to get customer 75%, so you get the value. What is the actual night? Yeah, actual night and rooms used. Okay, and then this is the actual cost in terms of dollar. You are required to prepare a fixed budget performance report for 2020. Is by preparing a budget for each cost item based on fixed cost plus variable cost per room per night multiplied by the actual number of room night occupied. So you need to compare what is your budgeted. What is your budgeted? How to calculate the budgeted? The fixed plus your actual times your variable. So you get your budgeted, and this budgeted you're going to compare with this actual. You're going to see whether you perform well or not compared to the budget. Okay. So are you okay with that? So how to calculate the fix? If you have here 32, let me just help you with this. You have 32 rooms multiplied by 365 multiplied by 75, meaning the number of night and room is 8760. This is number of room and night, 8760. Okay, 8760. 75%, yeah? So if your cost for wages, this is for your wages, the fixed element is 128,000. The variable element will be $6 multiplied by 8760. So this gives you, if you multiply by 6, this gives you 52,500. So your total budgeted, this is your budgeted wages is equal to 180,500. How did I get this number? First, this is the fixed element. This is the fixed element wages. This is the fixed element. There is 128,000. So this is the fixed element. The variable element is $6 per room per night. So I have here 8760. So that gives you additional cost of 52,500. The more room and nights, yeah. So the more will be the cost. If you have 0 room, maybe because of COVID, 0 guests, so the value will be 0. 6 times 0. Yeah. So the budgeted amount here is 180,500. Okay, and when you look at your record, the actual is 17400. This is the actual, but your budgeted is 180,650. 180,650. 180,500. Sorry, 180,500. So my question to every one of you, whether in terms of wages or labor, are you doing well or not? You expected you are going to spend 180,500, but the actual is 174,000. Are you good or bad in managing this cost? The answer is good. Am I right? Because you're able to spend lower than budgeted. You are able to spend lower than budgeted. So you need to identify for every item what are your budgeted figure. Yeah, for every item, what are your budgeted figures? And then you're going to compare whether your expenses is lower than the budgeted or not. Okay, so your example, in this example, this is our budget. This is called as fixed budget. This is our actual, and we are looking at the differences. The differences here is 6,560. Okay, 6,560, and this is favorable. Favorable means good. Why is good? You spend less than the actual. Less than the actual. Sorry, than the budgeted. You spend less than the budgeted. For electricity, you spend 49,000. Sorry, you spend 49,000, but the budget is 59,000. So this is favorable. This is good as well. Okay, but for cleaning, your budget is 84,560, but the actual is 88,000. So this is not good, unfavorable. For supplies, your budget is 21,540. The actual is 18,000. So this is good news for you. Mean you use less supplies. So it's a cost saving for you. For water, your budget is 17,000, but you found that you paid 22,800 for the water. So this is not good. Yeah, this is not good. And for maintenance, your budget is 15,000. What happened is there are many damages, repairs need to be done. So the actual is 16,200. So this is not. And then you compare the overall budget is 378, but the actual is 368,000. So it's still favorable. So you can analyze for each type of expense, for each type of revenue using this fixed budget performance report. Yeah. So this is how you're going to do that, and you are going to explain. You're going to investigate for each item why you spend more than the budgeted. We're going to investigate for your cleaning why you have to spend a lot on cleaning, for water as well as for maintenance and repair. Okay, and as a conclusion, the role of budgeting in the planning and control function of management is very critical. It's important to have a good organization structure to ensure that you can achieve your budgeting target and goal. So we also need for management participation in come up with a budget to ensure their acceptance, their commitments to achieve the budget, and to make sure we have good input from them. Okay, and then we did discuss about several benefits of budgeting, and I did show you about master budget, how different industry, service, retail, and manufacturing have different set of budget, though they have common areas. For example, the sales or income budget, capital expenditure budget, the cash inflow and outflow budget, income statement budget, the balance sheet budget. There are also elements that are a bit different, especially in the manufacturing, where you have to prepare budget for your labor, for your factory overhead, for direct material, and many more. Yeah. So we also look at the differences between operating budget and financial budget, discuss the significant importance of incomes or sales forecast, and interpret set of operating and financial budget with master budget and see how it relates with the manufacturing entity and how we're going to use budget as a performance reporting, to show the performance of the responsibility centers or managers, as well as a medium for controlling, the finance of the company. I think that's all from me today. Thank you so much for watching the video or for being here with me.